Hi. Yeah, today I just wanted to share with you what's the market like leading to the month of May. Of course, there's been a bloodbath, you know, the entire 2022 from January to April. So, looking at all this, you can see that it could be a great opportunity to enter the market at this current May level. Um, of course, there are people saying that the Nasdaq, for example, will they behave like the China tech stocks? Which I think is unlikely. There's been like about a 20 to 25% correction on Google, 30 over percent correction on Amazon, 40-50% correction on Apple, on Facebook and Netflix. Um, and of course, I think we are also entering a normalization period for the big techs, whereby you can see that their growth are on singular digits below 10% per annum based on their projections. So there is this likelihood that mega techs growth have slowed down, partly due to the fact that during in the COVID period, the usage of all these embracing tech has speed up as well from, let's say, something that is a 15% growth in a year for the next 10 years. That you can see that probably were like 40% growth in year 2020 and year 2021. So and the market has, the S curve has kind of like flattened a little bit for the big tech. So I think there's still a lot of many companies that have growth opportunities. Of course, the skill is to be able to identify them. Where we definitely now looking at company that are have like what Warren Buffett's just stated recently in their annual meetings that just happened after 2 years, where he said, look for exceptional business that can withstand inflation. Inflation, especially the last 4 months, with all the fear selling and all that's been happening. I think the over fear is there. I think in terms of this projected heights in the Fed in terms of interest rates. I think that's just a panic response, over panic and response. I believe US generally is still doing really well. They will be the beneficiary from the Russia and Ukraine war. Be it supplying fertilizer, be it supplying oil and gas to the rest of the world, especially Europe. And then back to be able to identify growth stocks that have still register 20% growth per annum at least. And if you can find something with a good earning EPS, meaning earnings, maybe low earning, the beginning of the S curve, these are companies that we probably want to identify and actually have real services that are in demand, whether it is e-wallet or e-commerce or a product that is really resilient. So I think we want to look for companies like that, of course, with a low price to growth ratio, the PAC ratio as well, something we want to look at. So you may have, for me, I'll still probably stick to one mega tech, which is Google, and maybe a couple of Nasdaq stocks that I feel that has potential to 10x. So yeah, and you can see that Warren Buffett also has taken this watered down period, January, February, March, to make a couple of big purchases from Active Blizzard to Activision, which is a Call of Duty apps, the acquisition by Microsoft, Occidental Purchase, Gecko Insurance, and a couple other businesses. So yeah, look at all this negative news out there, which catches a lot of readership. Tech stocks loses this, 1.8 trillion in March in a month, and the question is, are we at the bottom? And for me, I feel yes. We are actually in the middle of recession, based on what I think. Basically, recessions meaning it's actually 2 consecutive quarters of slower growth, and which we have already seen in most of the Q1 reports that's been out. So you can see GDP has also dropped 1.8%. Uh, so I think we are not about, it's not about fearing whether recession will be here. We are already here. But the next question is, what are the consequences of the recession? Whether will it create a credit crunch, default in loans, whether default in high mortgages, housing collapse, or whether there will be defaults in margin calls, for stock securities, or high unemployment in US. So these are all the things that we have to look at to see whether the Fed hawkish stance, if they were to maintain, which I still have this gut feel that they will maintain at 0.25 at the end of the day. I could be wrong. Instead of the 0.5 that they kind of like hinted out to in the market, to give this word called expected inflationary uh, uh, pressure, expected inflationary pressure to ease. Um, so, just to create a little bit of fear out in the market so that people will reduce spending. So overall, I still think it's good. As you can see, Warren Buffett is actually buying in, and so ability to look for great stocks are something that you probably need to do a bit of research on. If I came across anything great, and I'll definitely update you. So yeah, thank you very much for watching, and I hope you can uh, click a like to the channel, to my video, and and channel, and more to come for sure. Thanks a lot.